Hello and welcome to the section called Stocks I Hate, where I talk about stocks that I hate. The first company that I want to talk about today is a Canadian stalwart, at least a company that a lot of Canadians own for the yield that it spins off, called Student Transportation. Now, why do I hate student transportation? Student transportation reminds me of a rotten building. You know this edifice is going to crumble at some point, but you don't know when it's going to crumble, but you'd never want to spend a lot of time in it in case the roof would come crashing down on your head. That's my idea about student transportation. Investors in student transportation are playing what I think is a dangerous game of financial hot potato. Here's why. First off, to paraphrase George Orwell, all shares are created equal, but some are more equal than others. There are management shares that have embedded put options in them, which means that management grants itself shares that no one else has access to, that allows management to sell their shares back to the company, oftentimes at a higher price than it exists in the market. That suggests to me a bit of corporate corruption, and it bothers me, so that's one reason I don't like student transportation. Another reason I don't like student transportation is the fact that their balance sheet or their capital structure is risky as hell. And here's what I mean by that. They've expanded their operations by buying other companies. And let's say that the assets of the company that they buy are worth, say, $5 million, but they pay $8 million for that acquisition. That $3 million extra is something called goodwill. And goodwill basically just represents the value over and above the assets that you've acquired. And it sort of sits on student transportation's balance sheet as this thing called goodwill. Now, there's different types of goodwill. I won't bore you with the details, but this is a type of goodwill that doesn't get depreciated. It just gets analyzed for impairment annually. Not an important distinction, but the fact of the matter is that 25% of student transportation's assets right now are goodwill. And I think these assets are kind of vaporous. They don't actually represent any real value. They don't meet the definition of what an asset is under the rules of GAAP or IFRS or anything else. And so I think it's kind of a asset. Can I say it's a asset? That's on the asset side of the balance sheet. On the liability side of the balance sheet, the liabilities that student transportation has are understated because the operational leases that the company has taken on, those represent future financial obligations of the company. So technically they are liabilities. Those don't get reported on the balance sheet. So basically, student transportation's balance sheet has got negative equity of about $95 million. And what does that mean? Think of your house. Let's say your house is worth $100,000 and you owe $195,000 on your house. So your mortgage in that case is negative equity of $95,000. Student transportation's balance sheet in that context has got a negative $95 million value. That's a problem. Student transportation to me represents the worst of what we're seeing in the investment world at the moment, when people are buying anything, no matter how crazy, in order to search for yield. So student transportation right now has a very seductive yield, and people are buying it as a result of that, but they don't realize that most of student transportation's cash flows come from borrowing money from the bank or issuing new shares to shareholders. There's operational cash flow. The day-to-day business of student transportation does not finance that yield, and sooner or later that yield's going to have to come down, and that's why student transportation is a stock that I hate.
Birds come and cry there, and twitter in the